Everyone, this is Rob Roy of Elliott Wave Options, and welcome to this week's U.S. market update. As you can see from the background, I'm back in the Dragon Capsule in Florida, at least for a little while. We'll see how long that lasts with this time of the year being so great up in the mountains. Taking a look at the chart of the market, it's not been a good week. You can see that we had a big move to the downside here on the back of the PCE price index that came out today. That's an inflation gauge that the Fed prefers, and it came out the core version of it. So yeah, even the Fed's indicator has to have a core versus a headline, but the core number came in at a 0.3 reading increase, and that was as expected. So you'd think, okay, well, as expected, that's not so bad. The problem is that it was 0.1 back in August, so it's still a little bit elevated. The problem, I think, out of the report this morning was the fact that personal expenditures rose 0.7% when only 0.5 was expected. So the consumer continues to spend, and that, I guess, creates a problem. We'll talk about that with some stocks later. In fact, if you take a look at the stocks on your screen now, these will be the ones that we're featuring in this recording. And as a reminder, you can go directly to your favorite stock using the chapters feature on the recording. All right, so back to the charts of the market here. Looking to the downside, we have this move here. We're zigging and zagging to the downside here. These Elliott Wave zigzag patterns just continue to be absolutely spot on. If you're not following Elliott Wave, I'm not sure why. We come here week in and week out and show the accuracy of these patterns. And you can see that this current zigzag has gone to 161.8% extension. Now you can see I have the level down below there at 261.8. I don't show that all the time because it doesn't happen all that often. It does happen from time to time. That would be pretty ugly, obviously, for the market. But then when you take a look over here at this tap box, the time and price projection, which is forecast off where we are now in the wave 3, reminder that this does not mean that we're moving into a wave 4 now. This means that if we move to wave 4 now, that's where you could expect resistance and then a continued extension down in the wave 5 to this area. But the bottom line, which I try to highlight each and every week, is this software is programmed exactly to the Elliott Wave algorithm, the algorithm that Ralph Nelson Elliott himself wrote. These are not my labels. I just try to do my best to interpret them for you each and every week. For some reason, the algorithm likes this price around $395, which is not too far away from that 261.8% level. And that level can be hit on the 3-wave down or after a wave 4 bounce and then moving lower. The positives that we have, which aren't a whole lot right now, are the fact that we are a bit oversold in the market, but we have been for the past 3 days. You know the rule that I talk about a lot: no security in any time frame gets very far away from the 10-day moving average. And we're a little bit below that, but again, we have been for a couple days. Now we are getting kind of vertical on this move down. So if we're going to bounce, even just a relief bounce, which I think is probably all we're looking at, this will be a pretty good spot for it because we have that consolidation there going back to April and May, and it also coincides with exactly where the 161.8% extension is at 410. So we're a little bit oversold. We're at a pretty strong fib level at 161.8, and we're at a level of price support going back to April and May. Let's see if we can bounce a little bit at the beginning of next week, maybe at least back up to test this 420 level, which would be right where that 10-day moving average is. Probably just sets up some more downside from there, at least the way things are playing out. But that's the possibility. So if you're looking for some sort of a bullish signal, maybe we get a little bit of an oversold bounce at the beginning next week. If we take a look at the 10-year, I saw there's a lot of commentary on last week's recording, a lot of nice comments. Appreciate those. Also appreciate the comments that are contrary to what I'm sharing. That's what this is for. Differing opinions make markets. If everybody viewed the markets the same way, there'd be no markets. So there has to be buyers and sellers, etc. But when we get comments that I feel are a little bit off, I'd like to try to point those out, talking about how the TNX had relabeled, meaning that we were going to have lower rates. And we had this wave 5 high back on the 2nd of October, and then we relabeled to a wave 3, which means higher rates. So I'm not sure where that comment was coming from. And I would like to point out, and I know this is always a point of contention with Elliott Wave. Some people don't like the relabeling. I think it's one of the best things about Elliott Wave. Some of you have backed that up. The markets are dynamic. They're ever changing. They're not static, and no indicator that is not dynamic is going to allow you to be successful. Your indicators better be changing like that with the market if you want to have long-term success. Now, I'm wrong a lot, but I've been around doing this for 27 years, so I'm right more than I'm wrong. But yeah, I'm going to be wrong sometimes, and Elliott Wave is going to relabel sometimes, but that is what aids in long-term success. So that's when we relabeled, and we've moved to the upside at a little pullback, but we're still in a wave 3, and that wave 5 high, same thing I just talked about on the way down with the SPY, is showing the fact that we could move up to 5.3 to 5.5 on the 10-year. So we are consolidating on the 10-year right here, but that correlation with rates up, market down has seemed to have broken, because even as rates are consolidating here, the market has continued lower, and I think probably dealing with that PCE number that we had today. But I would like to encourage you, continue the comments. As you know, we are making a push towards 40,000 subscribers. Every time you post a comment, that gets you an entry. And once we hit 40,000, we made a big inroad last week. Thank you so much for that. Once we hit 40,000 subscribers, we will be able to give away 4 of our level 3 alert package services. And so that's directional trading, non-directional trading, and our new AI-based income strategies. So they're each worth thousands of dollars. So look forward to giving those away. So again, thank you for your comments, and please keep them coming. Now, we've talked about this 10-year incessantly, it seems like, on our Tuesday night Trade Finder. And if you haven't registered for Trade Finder, please do so. You can do that right there on the link on your screen. We do this every Tuesday night at 9 p.m. Where we talk the markets, we look for trade ideas, and we have a live Q&A. And we have a great group that interacts with us. And so love to have you join our Trade Finder this coming week. So please do that. We had our live show over on the Hub Financial channel earlier today. We do that on Fridays at 2 p.m. Eastern Time. So if you haven't registered for that, go over to the Hub Financial channel here on YouTube and register, and join us for the live show every Friday at 2 p.m. as well. So lots of opportunities for live Q&A with our service. We want to try to interact with y'all as much as we possibly can. So it looks like higher rates at some point for the 10-year. That's not good for the markets. Looking at the dollar did go through a consolidation here, but it's trying to sneak back to the upside. It doesn't really matter until we get above this wave 3 high that occurred back at the very beginning of October. We're not there yet. Certainly looks like we want to try to do that. So pretty solid consolidation there. If we get rates going up and the dollar going up again, hard to see other than some sort of an oversold bounce where the movement to the upside could be. Now we have had commentary, we don't expect the Fed to raise rates next week. And then there was some that are saying maybe the Fed could surprise with a rate hike. Gosh, I hope that doesn't happen, because that could send the market down in a hurry. Now, we've been looking at the VIX, and the VIX is just kind of crawling to the upside. So even as the market moves lower, there's been no real significant fear, certainly no panic. And if you look at the VIX, we actually have a zigzag pattern in the VIX. And I know some of you question, why do you put these patterns on the VIX? Well, it's a chart, and the chart patterns work. And basically, it's looking like from this zigzag pattern on the VIX that we need to get up to at least 24. Now, how fast that occurs certainly will aid in the amount of volatility in the markets. But gosh, it's just hard to imagine that we'll put in some sort of a meaningful bottom other than any sort of oversold bounce without a spike in the VIX, without some sort of a panic day where there's a bit of a washout and everyone that wants to sell has sold. But people don't seem to be all that concerned about things moving to the downside so far, which has been really interesting for me. And taking a look at Bitcoin, we talked about Bitcoin. We talked about how Didn't see how you could be short unless it broke below 25,000. And if we broke above this 31,000 level, we could be off and running. And that's exactly what has happened. Bitcoin is moving significantly to the upside. We are consolidating that vertical move. The only negative here is the vertical nature of that move, but we are consolidating. You can see we're still overbought away from the 10-day moving average here on Bitcoin. I would say that even if Bitcoin came back down and tested 31,000 as it was resistance for a while to test it as support, you still have to be long Bitcoin, and it's still bullish, but we're trying to consolidate right here. And if we consolidate this area where we have this big vertical move and we move into a little pennant pattern, kind of like the old golf flag, is what I always think of with my past career as a golf professional. You look at that, and that means that there is some sort of a breakout coming in the not too distant future on Bitcoin. But remember, triangles mean you could break either direction. Now, it's not a very large triangle, even though Elliott would always say don't diss the small ones. But if we move to the upside, kind of around that wave 5 target, if we move to the downside, would bring us about down to testing 31,000. So breakout of that triangle makes sense on either direction. But after that big move, we'll have to let this breakout occur on Bitcoin and see what direction it goes. I would say for a longer term view, you'd kind of like to have some of that vertical move retraced a little bit. I just don't like these vertical moves. You can see in the past, back here in June, vertically up, looked like a great consolidation sideways, but we had to go back and retrace it. And that's what happens on those big vertical moves. So a little bit of a test back down to 31,000, maybe even label this wave 4 here, I think is a better longer term setup for higher moves in Bitcoin. But there's your upside breakout. Now, I've been talking for the past few weeks that I thought if Bitcoin would break to the upside, perhaps it would bring coin along with it. We talked about this Tuesday night as well in Trade Finder, where we had this big move up. It seems like every week somebody in Trade Finder in the live Q&A asks about coin, and we talked about another one of the rules. I talked about the 10-day moving average rule, and when we break out of a consolidation pattern, whether it's moving averages, triangle, support, resistance, etc. One day doesn't mean anything. You have to have that second day follow through or confirmation day. So we had this big breakout here, but no follow through day. Right back, and so here we are. I still feel like you can stay long Coinbase as long as it stays above 70, especially with the strength in Bitcoin and the other cryptos. But a break below 70 changes that game significantly. So for now, as long as we stay above 70, I think you can stay long Coinbase. Do have to keep a nod to the fact that we are in a qualified 5-wave to the downside pattern. So a break below 70 probably means we're coming below 60 to this wave 5. But it has to break below 70 first. So for now, on the short term, stay long as long as it's above 70. If it breaks 70, then probably don't want to be bullish Coinbase, even regardless of what Bitcoin is doing at that point in time. Now, some stocks of interest. We had a question on Ulta, and so we wanted people wanted to look at that. So there we are. Kind of an ugly move to the downside. Once again, we have our zigging and zagging here to the downside. So another really nice zigzag pattern. Also coming down to the 161.8% level. And when you have this, the B-wave correction was right at the 61.8% fib level. That means you look for 100% extension. And look what happened when we got to the 100% extension. So again, if you're not following along with Elliott Wave and the zigzag patterns in your own personal technical trading, I really have no idea why, because week in and week out, we talk about how accurate these patterns are. So we go sideways for 2 weeks at the 100% extension. And then you wonder, okay, are you going to get an extended move on the C wave? And we did. So we moved down to the 161.8% level on the basis of another zigzag pattern to the downside here, which coincides, look where we went, right to the 100% level, right again at a 61.8% B wave correction, right down to the 100% extension. So these zigzags have just absolutely nailed this wave 3 to the downside in Ulta. So if you are a fan of trading Ulta, this is the indicator that you want. And I love zigzags in wave threes. It's my favorite of all directional patterns. When you have zigzags within wave three being the strongest waves, that's the most accurate directional pattern you can have, in my opinion. And there you go. Two perfect examples based on a comment. You can go back and look at last week's recording and see somebody ask about looking at it. So there we are. Other stocks of interest this week. A lot of comments about Tesla, which there are each and every week. And you can see that we had this big triangle pattern here. And we talked, I believe, last week that we could break either direction on the earnings report. When the earnings report came out, Tesla wanted to break to the upside. It did initially. And then Elon had his conference call, and he was pretty doom and gloom about the access of consumers to buy new cars with interest rates moving to the upside, and that the focus at Tesla was going to be to try to reduce the price to make cars more affordable with rising rates. In addition, he talked about the Cybertruck, which is going to start deliveries in November. And he tried to temper expectations there as well, saying it'd take 12 or 18 months before they started showing meaningful numbers to the bottom line. So yeah, Tesla wanted to go higher on the earnings report until Elon started talking, and then we moved lower. And now we're down here in an area of potential support right here in this 200 area. Obviously, we got a bit oversold on that breakout of the triangle, but that shows you the beauty of triangles. We get these breakouts. So can we hold support there? We have the round number of 200. We have where 200 acted as resistance back in February and March and April, finally breaking above it in May. Now we're back to test it again. So this is your number on Tesla. If you want to be long Tesla, you need to see it hold this 200 level. So if we hold here, perhaps we can get some sort of an upside bounce. But if it gives up 200, then I think we're probably looking at testing these lows down here at 160. So anything above 200, you can look for some sort of a tradable bounce at least on Tesla, but a break below 200, and then you probably are looking more downside down towards 160. And backing off that, we had Ford that came out on their earnings report, and that's pretty ugly in today's trade. They basically withdrew guidance. They're worried about costs, just as Elon was talking about. At Tesla, Ford was kind of echoing the same thing, and there you can see that big drop. And that was pretty significant on Ford because we had some support there at around 11.5. I know some folks were hoping that maybe we could hold there and try to bounce back above 12. It didn't. Now we're looking towards 100% extension. We are a bit oversold here on Ford at this point in time, and we're nearing a very significant level of 10 on Ford. We know that Ford is heavily owned by institutions and even those in growth and income funds that own Ford want that price to stay above 10. So I feel like you're probably near the bottom here on Ford. I'd be very surprised to see it meaningfully break 10. So perhaps a test of 10 and maybe some sort of consolidation setting up for a bounce. But it was pretty negative on the comments out of Ford, especially with the withdrawal of the guidance. But well-formed 5-wave, another great Elliott Wave pattern here, right near 100% extension, right at that 10 level. So perhaps we can find some sort of a bottom in here around 10 on Ford. Alphabet, ugly on their move following earnings. Earnings report wasn't that bad, but it seems like the market just wants to find an excuse to sell right now, even if you say something halfway decent on your earnings report. And there's that move down to 120. Perhaps that can find some support. So as ugly as the market looks, and looks like perhaps there's more downside to come, maybe based on some of these individual stock charts, at least, if not the market itself. But some of these individual stocks are a bit oversold and maybe can give some tradable bounces. So perhaps Google can bounce from here. It really needs to hold 120. You can see the consolidation back there in May, June, and July. If it doesn't hold that, then highly likely we're coming down to 110, and that could occur rather quickly because there's really a vacuum there. Nothing in between 120 and 110 really that's meaningful. So we are oversold. There's the gap down. difference from the 10-day moving average. So lots of reasons, along with the support at 120, that perhaps we can see some sort of a short-term bounce out of Google. Looking at Amazon, there's one that bucked the trend. Up day today. Seemed like a pretty nice day, but then when you look at the overall pattern, you're like, gosh, that was just a little bit of a bounce. But it could be holding a wave 4 that's right in the area of a 61.8% fib level. We just saw the PCE price index, the Fed's favorite inflation indicator, that personal spending is still high. So there is some hope that the holiday season is going to be good for Amazon. Maybe they can build on that and build on this move to the upside today. You can see that we did close above the 10-day moving average, but right on the 50-day moving average, and also right exactly on a major spot of resistance there at 130. So Amazon has to navigate 130. It's got to get above 130, but it isn't a well-qualified 5-wave to the upside pattern. So other than this gap, gosh, I hate the gap. I wish it wouldn't have gapped up like that, because you always wonder when's that gap going to get filled. But a break above 130 with follow through, and perhaps we can have some sort of holiday rally out of Amazon. Pardon me. And last but not least, taking a look at GLD, and it's just sitting there waiting for that break above 185. We really want to see that break above 185. If we can get above that, then I think we have a meaningful bid that we've been waiting for out of the metals. So pretty exciting there. Pardon me again, but we actually have to get above 185. So we break above 185. I think you can go long gold and perhaps see some sort of an extended rally. So lots to cover this week. Hope you have a great weekend. Thanks for your attention. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.